Good morning. Okay. So, hello, good morning, good afternoon, good evening, traders, wherever you may be watching this video from. I hope you're having a wonderful time in these markets, as I have been. So, this week we're back again with the next episode of our weekly Forex forecast. So, this is what you're seeing in front of you is the chart for the DXY. And this is what we normally start with week in, week out, trying to forecast what we are seeing or, trying to forecast our trades in regards now to the USD pairs, okay? So this week, as usual, we're going to be looking at the DXY. We're also going to be looking at EURUSD, GBPUSD, and USDJPY. So let's get started. Now, last week I did mention something interesting, and that was the fact that we saw the market actually taking out this high. And I told you that as far as my trading is concerned, this high, this point, let me just mark it out. This point is really, really significant. Okay, that one right there. It's pretty significant because that was the last point of supply. That is the last area that we saw sellers coming in aggressively to take out that low. Okay, if you haven't watched the last two videos that I published, go to my YouTube channel. You'll find them there. So I did tell you that we should be expecting okay, not expecting, but this high was pretty significant. And the reason for that I told you is because that was the last point where we saw suppliers coming in aggressively to break this low. The fact that after tapping into our demand level, we saw price actually, moving to the upside and breaking that high at that point. That was pretty significant for me because it shows me that probably perhaps the buyers do want to commit to their buy position. The buyers are coming into the market. The fact that we broke that high, it tells me that perhaps we may see some, the buyers are starting to commit. And sure enough, you can see last week we saw that dip back into this demand level. And then now from there, you can see the reaction that we are getting. Finally getting a clean change of character to the upside. So how should we trade this? Now moving into the next week. Now, but this will be of course guided by the 1 hour. Now moving into the next week, and this what you saw, this change of character, this one right there in the lower time frames, in the 1 hour time frame, that would be represented by by this internal trend. Because on the 1 hour, if you've been following these videos, you'll notice that in the 1 hour we've been following what I call the internal structure. So we did change the trend on the internal structure. This is where it broke. We've been trading to the downside, but finally we got that internal trend change. So now we are no longer looking for sales. At the moment, we are looking for buys. Do not concern yourself with this. This is totally irrelevant right now. Phase C, counter swing, and that is just my trading style. So you shouldn't be concerned with that. So what you should be concerned with, however, is the fact that we changed the trend to the upside. Now moving forward, what I'm expecting is a pullback, probably into some of these demand levels. So we do have that demand level number 1, demand level number 2, the mid, because we have to measure the. Of course, what I did mention was that immediately we change trend, or immediately or once we break structure, what we can expect is a pullback. Okay, So we broke that structure to the upside. What we should be expecting is a pullback. All right. So assuming this is our high, this is the high, then of course we can expect a pullback to the 50% of that range. Now the reason why I've marked it out, I've marked these, sometimes the market is aggressive and we may get a reaction from any of these, okay? Especially when we have not hit like this supply level, because that is a daily, not daily, but I think it should be on the 4 hours. So you see, we have that supply level. We also have that supply level. So yeah, when we haven't hit that, a significant supply level, you can expect that the market will react from the immediate demand levels, and we have that demand level. We also do have that, but on the extreme, we have these two demand levels where we are expecting price to gain that momentum to the upside. But then, of course, that could also be very well a manipulation. So anyway, we trade what we see, know what we think, and at the moment, what I'm seeing is that the trend has shifted in our favor. These The DXY has been moving to the downside. Um, I think the sales at the moment are overextended or are oversold, I think. So I think these we may start to see that reaction to the upside to mitigate some of these supply levels. And also should note that all of this is liquidity. We need to, you know, you need to pull back and then continue to the downside or continue with the dominant trend. So that is the DXY. Let's move to EURUSD. Okay. So this is the chart for EURUSD, and we're gonna start with the daily. Let's just start with the daily. Yep. So this is the chart for EURUSD, and this is the daily chart. We broke structure to the upside, and right now, as you can see in my notes, I've indicated that price is in between a supply and a demand level. But the one thing that we also should note is that the market was reacting from that supply level, and I don't know whether we mitigated that. Let's just check here. We mitigated that slightly, and then you can see the reaction that we are getting from that supply level. So I did indicate that price, this was, I think I did this analysis midweek, I think on Thursday, and I did indicate, or Friday, I did indicate that we were sandwiched in between this supply and this demand level. But right now, as you can see, price has broken that demand level. And as you always know my rules, once price has even if it's just a weak break, that means that demand or that supply is weak. So what can we see? This is the first time that we are seeing sellers actually in control of this market ever since we broke that structure to the upside. And this is the first indication, or this is the first strong sign that we are seeing sellers stepping in and defending their position. So what do I mean by that? As you can see, we broke structure to the upside, and the market has been really respecting the lows. Okay, so we respected that low, broke that structure to the upside, then we pulled back. We never broke below that low, and then from there you can see the reaction that we got. Price again took out that high, respecting what? Respecting the lows. But for the first time in a while, you can see sellers really took out that low, which means that right now we can start to anticipate that selling pressure coming into the market. And this is the first strong signal that we are getting. And it's also the same case that we are seeing with the DXY. So now moving forward, I'm expecting a retracement back into some of these some of these supply levels. And then now from there, we can expect, of course, to continue selling, okay, to the downside, assuming that the sellers would really defend their positions. So now moving on to the 1 hour. This is what we are having, and as you can see on the 1 hour, we got that swing trend change. So that is pretty significant for me because I'm a trend trader, and as we can see, we broke the trend to the downside. So what we are expecting to see, at least we should see some bearish pressure coming into the market, and this is the first reactionary point where we should be expecting to see a retracement back into some of these zones, and then from these zones we can continue selling, or we can continue trading with the dominant trend. Okay, again, what we can notice that both the swing and the internal trends are bearish, because this is where it broke structure to the downside, and as you can see, this is where the internal has been bearish. All right, and that is the trend that we should be following. So my expectation is that moving on or going into the next week, I'm expecting to see this downward momentum or downward pressure coming into this demand level, the 1 hour demand level, and then now from this demand level, that should kickstart, or that should initiate that pullback of both the internal and also the swing trend. So now for the swing trend, we may see the market actually coming all the way to the upside, but right now, as I, as I always tell you, we trade what we see, not what we think, and we trade the internal. That is the most, and that is the immediate structure that we should be concerned with. So for the internal, we are looking at a situation where the market may come into this supply level. If that gets violated, then that means that the internal trend has shifted, and now we are bullish, and that should also tell us that the swing pullback has started, and we should be looking for some of these extreme supply levels. But for now, let's just concern ourselves with the internal structure, and the internal structure, this is the two areas of interest that we should be looking for. So we have this demand level, and that should kickstart that coming into that supply level, and then now from that supply level we may continue selling this currency all the way to the downside, all the way to some of these levels. Okay, and that is how we should be trading that currency. So now moving on to GBPUSD, another one of my favorite. Let's start with the daily. And as you can see, if you've been following my videos for quite some time, I did mention that for me, this supply level really wasn't looking that great, and I was expecting to see a continuation now to the upside. But right now, we are getting that indication that perhaps sellers are stepping into the market to defend their positions. And this is like the Euro USD, this is the first signal, the change of character on a fractal scale. That tells me that we may see some downward pressure coming into the market. So now moving on to the 1 hour. This is what we should be concerning ourselves with. And remember, for GBPUSD, we are trading the internal, because the swing of the 1 hour, or the swing structure of the 1 hour, this is the last piece of that structure. So we are concerning ourselves with the internal structure. And as you can see, we broke the internal structure all the way to the upside, and so far we've been maintaining that bearish pressure. So just like the Euro USD, my expectation is that we may see price coming into this demand level, and then now from that demand level we can expect to see the market pulling all the way to the upside, but as I can see that we are forming some form of supply level from that level. So if we end up breaking that, then that would mean that this is the supply level that we should be concerning ourselves with, especially given the fact that we are seeing that bearish pressure coming into the market. So the market or price may end up actually not going to these extreme supply levels. So let's just wait and see what forms right about this region, and that would mean that that is the supply that we should be looking to trade from. And yeah, for GBPUSD, EURUSD, in terms of structure, everything is clear. I'm seeing bearish pressure coming into the market, but I'm looking to, for price to tapping into this demand level, and then now from that demand level, we can expect to buy in this fashion. Let me just show you that. So in that fashion, that is what I am seeing happening. Okay, tapping into that demand level, coming into that supply, and then continuing to sell to the downside. If that is not the case, then this should be the supply that should get respected, and then continuing to sell to the downside. So in summary, for the DXY, I'm looking for movement to the upside. For Euro USD and GBP USD, the same case. I'm looking for not the same case, but the opposite of that. I'm looking for movement to the downside. Let's look at the last pair, which is USDJPY. And USDJPY, I'm staying clear of this market. I'm staying clear of this market, and I'll tell you why. So as you can see, USDJPY has been the cleanest pair because we broke the daily swing trend right there. As you can see, that was the trend change, or the change of character, where we changed from a bullish perspective to a bearish perspective. The internal, because I trade the internal structure, also broke structure to the downside, and we were pulling back into this into this supply level. And as you can see, we tapped into that supply level, and as you can see the reaction that we are getting from that. So how should we trade this? Let's just go to the 1 hour. But also, one thing that we should note is the fact that we do have these imbalances to the upside. So if we are to trade, or if we are to take our trades in regards, or bearing in mind that we do have these imbalances to the upside, what I should expect to see is the market coming and breaking the fractal protected high. At least that should be the first signal that tells me that the buyers in this market are ready, or the swing trend, or the swing trend, we may expect to see a swing pullback from this demand level. But the fact that we came in, respected the fractal structure, we came in, tapped into that supply level, and then from that supply level, we are starting to break some form of structures to the downside. That tells me that perhaps it is not yet time to take out these, or to mitigate some of these imbalances. So let's just move to the 1 hour, and let's see what we have in this market. So now for the 1 hour, as you can see, the swing structure is bullish. This is where we broke the last piece of structure, but the internal of the 1 hour is bearish. So right from the start, you can see that we do have that conflict. Okay, and that is why I'm telling you we should stay clear of this market. It's either I trade I trade the internal structure, and at the moment, we do have this conflict between now the internal and the swing structure. But if we are to trade the dominant structure, or if we are to trade the bigger order flow, the swing structure, of course, takes precedence. And what can we see? We broke structure to the upside. The market tapped into these 1 hour supply zone, and then from there you can see the reaction that we got. So the market pulled back. Let's just measure that. Did it pull back to the 50% of our range? Of course it did. As you can see, tapped into our discount demand level, and then now from that you can see the reaction that we are getting from that. You can see the reaction that we got from that. So how should we trade this? I'm staying out of this market, and the reason for that it's because the internal structure, it is not yet aligned with the swing structure. And of course, again, for you can see what's happening on the daily, and this is why I said, if you can take a read at this, so I said, trading from this level, that is phase C, and it's quite risky. And also trading from this level, that would be considered phase B moves, and that we do have a good probability of success, but it's also kind of risky. So until the internal structure and the daily and the internal structure and the swing structure gets aligned, I'm staying clear of this market. And how do they get aligned? By breaking these 1 hourly targeted high. If we do break that, then, or breaking these internal targeted low, if we can have that, any of that, then I'll be, most of my confluences will be aligned. So for USDJPY, I'm staying clear of that market until something gives. So for now, I'm looking at these two opportunities, what we have in the GBPUSD and GBPUSD pair. For me, kind of looks the cleanest, and also EURUSD pair. These two, I'll be looking to trade those two currencies. For USDJPY, I'd be staying clear of that market. So that is it. That is it for these two pairs. I hope you learned something. Okay. I hope you learned something from my analysis. So if you are to trade, basically let's just trade EURUSD and GBPUSD. For USDJPY, let's just wait for some more price action, and that is it. I'll see you for the midweek analysis video. Yeah, and that is it. That is it. Bye bye.